Hello everyone, good evening. Warm welcome to Super Coaching Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. I welcome you all in a very important session where we are going to discuss in detail about the latest current affairs, or I would say the last week current affairs related to finance. If you are preparing for RBI or maybe any other regulatory body exam, or for that matter any other bank exams, finance is going to play a really very important role, and undoubtedly many questions will be asked in the examination from the finance itself. So before we start the discussion, may I have a reply in the comment section that I'm audible, visible, everything is fine, we are good to go, so that we can begin the discussion without any further delay. Could you please reply in the comment section that I'm audible, visible, everything is fine, so that guys we can begin the discussion without any further delay. So today, majorly, or I would say the maximum news are from SBI, because SBI was in news in the past, and in the past 1 week, many important news have been updated from SBI, which we will be discussing in today's session. So let's get started without any further delay. I hope you all are ready and you want me to start with the discussion. Let's begin the discussion now. Here we go with the first news. But before I start the discussion, I have an important update that this is not the only session where we provide you with the weekly current affairs. Rather, we have a session for weekly PIB analysis every Monday 6 p.m. Tuesday is for finance, Wednesday is for RBI, then Thursday we cover the latest government schemes, ESI, current affairs, and important reports and indices, which means you need to join this channel every day at 6 p.m. if you want to cover the specific current affairs related to your upcoming RBI examination. This is my Telegram channel. You can join with me on my Telegram channel where you can download the PDF of this session as well. Let's begin. Here we go with the first news. The first news talks about State Bank of India, and the second term is mentioned, that is Exim Bank. As we all know, that is Export and Import Bank. Now, what is the news? The news is SBI and India Exim Bank bridge trade financing gaps in Africa. So let's check out what is this news all about, what kind of trade gaps have been fulfilled by SBI and Exim Bank. Let's check it out. So the first point from where I'll start my discussion is, so State Bank of India and India's Exim Bank are actively supporting businesses in African countries by addressing the finance gap. Now the question is, this is the statement, but why it is in news or where it was discussed? Then the answer is, as highlighted by the South African heads of the two organizations during India Entrepreneurs Forum. So this is the point from where we are going to start our discussion. So recently, India Entrepreneurs Forum was organized, and during that forum, or in that forum itself, this announcement was made, or I would say this was discussed by the South African heads of two different organizations, which says SBI and Exim Bank of India, they are fulfilling the financing gap, or they are fulfilling the finance requirements to the African nations, to the African business owners. If I talk about this particular event, then in this particular event, we need to understand this initiative was highlighted where? So this initiative, as I discussed, it was highlighted during the India Entrepreneurs Forum, which is initiated by Consul General of India, Mahesh Kumar. So it was initiated, India Entrepreneur Forum was initiated by whom? So it was initiated by Consul General of India, Mahesh Kumar. The next point which you need to remember over here is, what is the purpose of this forum? I'm talking about India Entrepreneur Forum. So the purpose of this forum is, why you need to keep this forum in mind? The reason is to assist companies which are engaged in trade with India by enhancing their capacity. So India Entrepreneur Forum is basically a forum where the entrepreneurs, they come together and they discuss the current requirements, as well as finance gap is also fulfilled by the organization. So to assist companies which are engaged in trade with India by enhancing their capacity. So in this India Entrepreneur Forum, we assess the companies which are engaged in trade with India by enhancing their capacity, and it focuses on helping small businesses navigating the complexities of trade finance. So these are the purpose of this particular initiative which has been taken by SBI as well as Exim to provide finance help, or I would say assistance, in order to overcome the trade finance gaps in Africa. The next point which is important is, if I talk about the SBI contribution, SBI offers bilateral credit lines to major multilateral institutions. So SBI has offered bilateral credit lines which include Africa Finance Corporation, which include Africa Exim Bank Corporation. So it supports over 40 African nations. So this funding, or this bilateral credit line, is supporting 40 African nations to help the Indian corporates with bank guarantees and requirements. So remember that SBI is supporting 40 African nations, so that the 40 African nations can be getting the, I would say, they can get the help. They can help the Indian corporates with bank guarantee requirements if they are trading with the African nations, or if they are trading with the companies based in Africa. Direct funding indirectly reaches small corporations, enhancing overall trade. So this direct financing or funding which is done through the credit lines, it reaches indirectly to the small companies, to the small businesses, which is undoubtedly enhancing the overall trade in the particular continent, which is Africa. The next point which is important, that is, what is the role of Exim Bank? Sir, Exim Bank is active in 31 African countries, focusing on integrating India's economic engagements. Remember that projects supported include IT solution for national identity documents in Ethiopia. Then we have electrical network construction in Burundi and many more. So not only SBI, but along with SBI, Exim Bank is also active in the African continent, and these two organizations, they are supporting the African corporations, African organizations, as well as African companies in order to enhance the trade in Africa, which will undoubtedly enhance the international trade, or I would say cross-border trade with India as well. So this is all about this particular news, where it has been said during the India Entrepreneur Forum, it has been mentioned that SBI and Exim Bank is doing pretty well in order to bridge the trade gap in Africa continent. Got it, guys? Clear? Now, this initiative, it is a strategic initiative because the trade assistance program is basically to reduce trade finance gap by enhancing credit instruments and enabling transaction in untapped markets. So basically this initiative, it is a strategic initiative because we are providing, or I would say the organization, Indian organizations, they are providing, or they are running trade assistance program. And what is the aim behind running these programs? So the aim is to reduce the trade. The aim is to reduce the trade finance gaps so that we can tap the untapped market. So it is a bless for the African countries, but again it is a bless for Indian organizations as well, because the Indian organizations, they can tap the untapped market because of the initiatives which have been taken by the Indian organizations. Remember that the exploration of credit lines for South African banks for project in neighboring countries like Zimbabwe, Zambia are already going on by these organizations. If I talk about the collaboration between the two, sir, complementary institutions rather than competitors. This means these two institutions, they are working as a complementary institutions rather than competing with each other. Both banks, they adapt to change in global trade practices, including potential shift towards local currency transaction among BRICS nation as well. So this initiative is a strategic move, not only for these two banks or these two organizations where they are maximizing their profit and they are tapping the untapped markets of Africa in order to increase their customer base and increase their services, increase the profit, but along with that, it is an important fact, or I would say it is an important initiative for the entire economy of India, because it will help the Indian retailers, the Indian traders to reach to the African markets, so that the trade initiatives or the trade can be increased between the two countries. Is it clear, everyone? So this is how you need to remember that recently, as per the announcement made during the India Entrepreneurs Forum, SBI and Exim Bank is filling SBI and Exim Bank is filling the gap. SBI and Exim Bank is filling the gap, that is the finance, or I would say trade finance gap in Africa, and they are trying to tap the untapped market in order to increase their international business. Moving on to the next news. The next news is again related to SBI. We all know that RBI comes up with a term that is domestically systematic important banks. So whenever we talk about these banks, domestically systematic important banks, so the announcement is made on regular basis, or I would say these banks or the banks falling in this particular category is revised by RBI on regular basis. But the question is, sir, what is actually domestic systematically important banks? So Reserve Bank of India provide title to the largest banks of the country as domestic systematically important banks, and these are the banks which are termed as too big to fail. And if these banks fail, it will undoubtedly impact the entire economy of the country. So keeping this point in mind, right now SBI, along with SBI we have HDFC and we have ICICI. These are the three banks as per RBI which are included under the category of domestic systematically important banks. Now, along with this, SBI was in news recently. And what was the reason that SBI was in news recently? So the reason is SBI has been named the best bank in India for 2024 by Global Finance magazine. Before this, RBI governor was named as one of the leading leaders of central bank, and similarly now we have the next name, that is SBI. So SBI has been named the best bank in India for 2024 by Global Finance magazine. So this Global Finance magazine has presented this award during its 31st annual Best Bank Awards, and this annual Best Bank Award was held in Washington. So Global Finance magazine is the organization which you need to remember. Global Finance magazine is the organization which you need to remember, and this award is given during the 31st annual Bank Awards which was held in Washington. And this event coincided, which is very important, this event coincided with the annual meetings of IMF as well as World Bank. Now, who accepted this award? So this award was accepted on the behalf of SBI by none other than the chairman of SBI. And who is the current chairman of SBI? The name is C.S. Sethi. The name is C.S. Sethi. If I talk about this particular award, so the Global Finance Best Bank Awards are renowned for their credibility, serving as a benchmark for assessing the financial institutions worldwide. So this award is one of the most reliable award in the world, and if a bank is receiving this award, this means the bank has really done pretty well in the past, because of which this award announcement has been made. The next point which is important, so this award provides valuable insights for corporate decision makers, especially global economic challenges. So with the help of this particular award, obviously it portray the actual picture of the bank's credit worthiness. And if a bank has been termed as best bank, and that too by the Global Finance magazine, it means it is one of the strongest bank of the world. Now, once a bank is termed as one of the strongest bank in the world, its trust in the market will increase, and now the bank's share prices will increase, not only in India but international, and even bank can raise the funds pretty easily. That means bank can issue its debt instruments, or bank, if require capital, can issue its shares in order to broaden its capital. So these two are the basic benefits. Beyond this, SBI is best bank, That means it will attract more and more international customers, such as international organizations, and even the nations can become this customer of SBI, which will enhance the SBI operations, revenue, growth, and profits in the near future. Moving on to the next point. Sir, if I talk about the SBI current structure, SBI is an extensive network of 22,500 branches. And remember that SBI is largest bank of India. If someone says that SBI is largest bank of India, what does it basically means? It means highest number of branches, bank branches are owned by SBI. Even the Indian bank with highest number of bank branches outside India, then also the answer is SBI. Secondly, SBI's YONO application, which we call it as You Only Need One, is also doing pretty well, which has registered many new customers, I would say in both the parts, saving, or I would say deposit customers as well as the borrowing customers. So this initiative of SBI is doing pretty well, which is one of the reasons that our SBI has been recognized as best bank in the world. Moving on to the next news. The next news is again from SBI, but this news is in reflection to the previous one. See, as I mentioned, that SBI is one of the best bank in the world, and it increases the credibility of SBI. It increases, or I would say, it increases the trust of customers towards the bank. Keeping that point in mind, SBI came up with an update, and the update is SBI will raise 5,000 crore, or SBI raises 5,000 crores via additional tier 1 capital, via additional tier 1 bonds at 7.98%. So first of all, let's understand, so what is this additional tier 1? Remember guys, this question was asked in RBI Grade B 2024 examination. The question was directly on additional tier 1 bonds. So you must understand what is additional tier 1 bond. See, whenever we talk about bank's capital, according to Basel norms, bank's capital is divided broadly into two categories. One is tier 1 and the other one is tier 2 capital, where tier 1 is the core capital, which include equity, I would say disclosed reserves, as well as the other profits of the bank. Then in tier 1, we have one more term, that is additional tier 1. And additional tier 1 is the capital of the bank, which is going to hold perpetual equity instruments, or to be very precise, perpetual preference instruments, where the investment is done in a preference share, but it is non-redeemable. Those kind of investments are included in this particular category. Okay, now, so if RBI, as asked by RBI, that every bank needs to maintain 9% of capital, that is capital to adequacy ratio, and in order to maintain this adequacy ratio, 9% of capital reserves is required, that, or I would say 9% of RWAs need to be maintained, out of which 2% is need to be maintained out of tier 2 capital, and rest 7% is need to be maintained out of tier 1 and additional tier 1 capital. Now, the last point is, along with this, CCB, capital conservation buffer, which is also maintained if required out of tier 1 capital only, its percentage is 2.5%. So in total, 11.5% of RWA is need to be raised, or it needs to be with the bank in form of capital. So in that particular case, if a bank is in need of these tier 1 capitals, they can borrow the funds by issuing these specific bonds, which are known as tier 1 bonds. So here we have additional tier 1 bond, which means these bonds are basically issued to raise the capital for additional tier 1. They were first conceptualized following the disaster global financial crisis of 2008. So after the global financial crisis of 2008, these bonds, they were basically introduced, Additional tier 1 capital, they are like the standard bonds only, but they have a comparatively higher rate of interest. These are basically what? So these are basically normal bonds. These are basically normal standard bonds, but they have comparatively higher rate of interest. That means if you are investing in additional tier 1 bond of any bank, you will be getting higher return in comparison to the general bonds which are available in the market. Next point is they are also listed and traded on the stock exchange, which means once you have invested your funds in additional tier 1 capital, that doesn't mean your funds are locked, because these bonds, they are traded on the financial market and you can easily trade these bonds. You can easily sell out these bonds in order to liquidate your investment, in order to liquidate your capital. The next point is banks issuing additional tier 1 bonds. They can even reduce the bonds face value. If required, they can even reduce the bonds face value. Additional tier 1 bonds are going to be regulated by which organizations? So they are going to be regulated by RBI, and if there is a need for RBI to bail out a bank, it can tell the bank to write off its outstanding additional tier 1 bonds without necessarily consulting its investors. So this is very important, which shows additional tier 1 bonds are secured or unsecured as per the statement. So these are unsecured because RBI, there is a need, if there is a need for RBI to bail out a bank, it can tell the bank to write off. It can tell the bank that you can easily write off its outstanding additional tier 1 bonds without even consulting the investors. That is the reason if these are unsecured investments due to which high returns are promised by the banks or by the issuer. Next point is what norms regulate additional tier 1 capital? As I mentioned, Basel III regulates additional tier 1 bonds because Basel III norms require Indian banks to maintain, not Basel III, I would say Basel III and RBI requires the banks to maintain a capital ratio of 11.5% divided into 8%. That is, in this manner they are talking about that additional tier 1 capital, tier 2 capital. In tier 2 capital you maintain 2% and rest is going to be maintained out of tier 1 and additional tier 1 capital. It should be noted that additional tier 1 bonds, as I mentioned, they are unsecured. They are unsecured subordinated. They are unsecured subordinated perpetual non-convertible bonds. So they are unsecured, first thing. Perpetual means valid till infinite. That means it will not be redeemed. Secondly, it is non-convertible. It cannot be converted into equity. These are the bonds which consist a component of banks' permanent capital. So banks, they issue additional tier 1 capital so that Basel III norms regarding equity capital can be met. What are these norms? This I have already discussed with you. One, we have the tier 1 capital, which is divided into equity tier 1 capital and additional tier 1 capital, and the other one we have tier 2 capital. Now the question is, what is the maturity date? As I mentioned, it is a perpetual bond. So additional tier 1 bonds, they have no maturity dates as they are perpetual bonds. They remain with the bank. Sometimes additional tier 1 are sold as limited period bonds because they come with a feature of call option by one of the issuing bonds. So generally, they are the perpetual bonds where the time period or the maturity period is not predefined. They are issued by the bank and against which bank will be paying the interest as per the given interest rate, as per the given mentioned interest rate in the near future. So I hope what is additional tier 1 capital, that is clear to you. But there is one more point, that bank has a power that bank can repay against these bonds prematurely if bank feels that yes, its requirement has been met. There is no need to hold high rate interest loan, then bank can even make the payment against these bonds in a premature manner as well. Interest payment can be or payout can be skipped. One of the crucial feature of additional tier 1 bond is that there is an option, very important, there is an option to skip on the interest payout without creditors coming after the issuer for defaulting on interest payment. So since additional tier 1 bonds are intended to increase capital of the banks, they can legally incorporate clause that allow banks to default on interest payouts provided that their capital fall below the regulatory requirements. If the bank's capital fall below the capital requirements, then bank even has the power to do not pay interest rate on these bonds. So think twice before you invest in these bonds. But obviously, if it is issued by SBI, we have more trust on SBI. In that case, you can easily invest your funds in the same. So as I mentioned, SBI successfully raised 5,000 crore rupees through the issuance of additional tier 1 bonds, marking its first issuance for the current financial year. So this is not the first time in the history, but for the current financial year, it is the first issue which has been done. This bond will carry an interest rate of 7.98%, which is high, but it is below in comparison to the previous year. Previous year, when our SBI issued or raised 5,000 crore rupees against additional tier 1 bonds, they have promised the interest payment of 8.34%. Now, details of the issuance, coupon rate and structure. The bonds are priced at a coupon rate of 7.98% with a call option. So it's not perpetual this time. There is a call option that you can call after 10 years. Investors' response, the issuance attracted significant interest, receiving 108 bids, including participants from provident funds, insurance companies, and mutual fund companies. That means it was highly demanded by the investors. If I talk about the comparative rates, the current coupon rate is lower than the previous issuance, which was done in January. As I mentioned, in January, it was issued at 8.34%. This time, it has been issued at 7.98%. 7.98%. Capital adequacy, as of 30th June 2024, SBI's capital adequacy ratio was 13.86%, which is down 70 basis points year-on-year basis. Therefore, there was a need of capital so that SBI can maintain its capital adequacy ratio in order to hold the tag of strongest bank of the country. Moving on to the next point. The next point says SBI has also raised 15,000 crore rupees through tier 2 bonds this financial year to support its deposit base. Remember this. And secondly, meanwhile, the Indian Bank is preparing to raise 5,000 crore rupees through infrastructure bonds, which will indicate a broader trend of capital raising efforts in the banking sector. So remember, 5,000 crore this financial year, 5,000 crore in January, 15,000 crore this financial year against tier 2 bonds, and then there is expectation to raise 5,000 crore through infrastructure bonds in the near future. Got it, guys? One of the most important news. I hope it's crystal clear to you. You must have enjoyed the discussion on the same. Moving on to the last news. The last news is, as we all know, that Paytm was not allowed to register new customers as per the RBI restriction, but now Paytm has received NPCI note to onboard new UPI users. Now, NPCI has allowed Paytm to onboard new UPI users after the RBI restriction. So let's talk about this. Paytm has received the approval by National Payment Corporation of India to onboard new UPI users almost after 9 months the restrictions which were imposed by Reserve Bank of India. So the decision is expected to increase Paytm UPI transaction. It will boost its volume as well as its market position. Remember that in January 2024, RBI restricted Paytm Payment Bank from adding new UPI users due to supervisory concerns, but now Paytm has been allowed to register new UPI users. The company UPI market share was earlier 13%. It fell down to 7% after this particular news, and in March, Paytm was permitted to operate as a third-party application provider using 4 banks. The name of the banks are SBI, Axis, HDFC, Yes Bank, but without onboarding the new customers. Is it clear? So please read out this and give me a I guess it's clear till this point. So in January 2024, RBI restricted Paytm Payment Bank Limited from adding new UPI users, but due to which Paytm share in the UPI market fell down from 13 to just 7%, and Paytm was permitted to operate as a third-party application provider using SBI, Axis, HDFC and Yes Bank. What does it basically mean? It means earlier Paytm Payment Bank was itself a bank and it was capable of allowing the customers to make UPI transactions. But now, if RBI has restricted them to hire new UPI users as well as restricted them to make the payments in that particular clause, this outcome came into the part and where it worked as a third-party application provider using these four banks: SBI, Axis, HDFC and Yes Bank. On 22nd of October 2024, NPCI has permitted Paytm to onboard new users subject to procedural guidelines and agreements which they need to fulfill with its Paytm service, with its payment service providers bank. So this move brings a relief to the Paytm, and obviously at least its UPI operations will be functional, which will help to improve its services in the near future. Now, the next point is, if you want to clear your RBI Grade B examination, then you must join our Lakshya batch. Use code MADHAV in order to enjoy maximum discount, and the moment you subscribe to this particular course, undoubtedly you are going to assure your selection in the upcoming year itself. So that will be all from my side in this particular session. At 7 p.m. I will be discussing a very important topic, that is ways and means advances. Do join with me in 7 p.m. session as well. And if you'll not be joining, then happy Diwali to all of you right now. And I will be catching you all in the upcoming days to go as well. Thank you so much. Good luck. God bless you all. Bye-bye.